Hope everyone's doing well and welcome back to another video. So I was meant to get this video earlier for you guys on the Monday, discussing a setup that was given in the mentorship chat, right? And it was essentially us looking for DXY shorts and longs on Euro USD. It was a bit of a short-term scalp, and what actually happened is, you guys can see this little box marked here. We were shorting from around this area, looking for that previous daily low here and the previous weekly low, but price did not move that way. However, it was still a decently profitable trade based on the read on price. I mean, for the guys that did get in, you would have been able to scout the majority of the move of this candle downwards before it had a bit of a major reversal from there and fully went the other way against what we were expecting. So, let's get into it. So it is a Monday, right? Took the trade on actually. And therefore, first of all, we're starting a weekly time frame. Let's ignore the current weekly candle, right? Where price was from here, we knew we initially, right, when price was opening here, we wanted to see a move down, right, which was fine. That is how the week opened, as you guys can see, right? With the Monday's close, we wanted to see lower prices, right? We wanted to see price push for this weekly fair value gap that was being induced. You guys can see I still have my alert on for it. Get rid of this. And, we wanted to see price run lower into this. So cool. And apologies, that's actually Tuesday morning the setup was, which is yesterday, not Monday, right? So in regards to context once more, this is how Monday's candle closed. This is how the following candle opened. From here, we were looking for price to head towards previous daily low / previous weekly low, considering the proximity and considering all of this sell side liquidity bunched up. And then from there, we wanted to consider longs. It hasn't gone to plan, but we'll see. So cool. Let's hop into our London Open session. So this is Tuesday's London Open. You come into the session, we see swing high created, we see, an impulse move, and then the retracement begins. Impulse move, and then of course from there we have a reversal. So what's important about this, right? How could we tell a reversal was to come in? Now, first of all, this is a very, very obvious gap, right? You have a strong impulse move, a strong fair value gap that is untouched, left behind, right? Hit. Now we have order blocks, right? Specifically bearish order blocks being created as we start retracing. We have a swing high to anchor off, high to low. Sorry, and this is our first premium array, right? So this is in the OTE. Price trades into this, and of course, after that, we expected more. Now, I always bang on about this. I know I haven't posted for a little while, so I hope nobody forgot. But, we always speak about the importance of time and price. Okay, we had these expectations for price. We want to see price bearish, blah, 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 blah. When do we want to see it? Now, coincidentally, it lines up that mid-session, you have the reversal point, or around about mid-session. 3:30 is when that expansion, 3:30 bang on the middle of London Open Killzone is when that expansion begins. This adds a factor of confluence to our setup / trade, right? Now, we come down to the 5-minute time frame. So essentially what we see is very similar. Of course, it's going to be an OTE. Have that retracement, and then we have a very large fair value gap on the 5-minute specifically printed very close to 3:30 within the same 15-minute candle at 3:40, and this would have been a telltale sign. Okay, you've hit the fair value gap. It's a premium array. It's at the right time of the session. Displacement away would have been a good time to take the entry if you hadn't already entered on the fair value gap, right? And then from there you could have picked off your targets. Sorry, like this. This is your local low. This would have been target 1. What this? This would have been our target 2, which is the previous daily low. And then, of course, this big gray box is the previous week low, which would have been the sort of Final target. Yeah, sorry guys. This is why I didn't get the video out earlier. I had a really bad cough. I think a lot of people are getting ill recently. Right, so cool. This was essentially the framework for the DXY. Super simple. Price hits the array, starts displacing away, takes that local low. When this low is taken, is when this low sorry, when this trade would have been set to either break even or to this high, which, you know, for a lot of people would have been approximately the same point. And then around here, you know, is where we have the reversal point and we start getting a bit of a consolidation, right? And when this consolidation occurred, what I told you guys was, look, it's the end of the session. We're getting a bit sideways. If you haven't closed already, this is probably a good place to close. And if you took this trade on EU, this still would have been somewhere between 2 and 3R for you, even at this consolidation. So it's definitely a decent place to close. And it is where I closed my own trade. Because, you know, if things didn't go to plan, the idea was, you know, New York may come and present further shorts, and then we will look to re-short it, potentially. If not, we sit on our hands. And what ended up happening, completely against our plan, New York came, messed around, we didn't take any trades. News event came, didn't offer what we wanted, choppy. And then today, due to different news drivers in regards to what Trump was saying for the dollar tariffs, again, price has moved bullish, even though we wanted to see a lower move, right? So it's in sort of no man's land. I believe we have the FOMC meeting minutes now. I'm not really sure if it's going to have a large impact, depending on what they're talking about. And the big move that we do have coming up is NFP. So, you know, bit of introspection there for you guys. The daily time frame, right? Now, we just don't have an amazing read on price yet. It's very sus that we sort of just left these notes in the market. But it is likely that we are running higher from here for now, right? You guys can know I'm really struggling to hold my cough for some of this. So cool. Let's match up the trade on our Euro USD, or rather, sorry, let's start with Euro, right? Pair selection first. Why did we pick EU over GU? Right, so firstly, this is Tuesday's candle, right? Now, the candle close doesn't really tell us much here from how I was looking. Neither does Monday's candle. It didn't really offer much. But when we come on a lower time frame, let's come back to the hour, and we look at Tuesday, what we could see was that price had swept sell side liquidity from Asia and started displacing higher. And this was a session where, of course, we were trading. We wanted to see a high EU for the time being. We have liquidity on both sides, but, you know, from here, if we've seen a sell side sweep, we've seen the displacement, then we can aim for the following buy side target over on this side. And of course, with that, EU was set up, and EU was definitely the cleaner looking chart at the time. When Euro GBP is in sort of consolidations like this, you can get away with trading either pair. If you can get that short-term bias, perhaps even if it's just the bias for the remainder of the session, just sort of how we call it here, it will make your life a lot easier. If price does retrace, you know, things do go wrong, then it buys you a bit of time to react accordingly. So cool. Now let's look at our Tuesday session over here. So the same way we wanted to short DXY, we actually wanted to long, right, the Euro USD. What we had was very similar. We had a range panned out, low to high, very similar fair value gap on the 15-minute. Once again, OTE came to the midpoint of the fair value gap, and of course, you know, as I assume a lot of people would have set this trade, would be along the lines of, you know, at the open, stop loss here, and most likely you would have been aiming for about this high, right? This would have been a sensible target, but of course the first target would have been this, which is almost 2R, and then somewhere in this consolidation is your 2R, and then that final target would have been a 3R, or very close to 3R, which actually was not hit. Now, this is how I had the trade set up, where I just took it on the open of the fair value gap, right? Price moved away, very nice. Well, I just get rid of this. I don't like using those. It's sort of overshadow everything, right? But essentially, the thought process behind it is cool. We call the OTE perfect, beautiful. It's at the right time of the session. Price has moved away. You're hoping that price hits this. The second that this high, the local high, was taken out, you know, stop loss went here, which would have been near enough break even. A very small difference of about 2 pips. And from there we plan to hold. However, this consolidation began and the end of the session approached. So again, like I said, I warned everyone, you know, this is a decent place to close. This was actually the first trade of the year, or the first setup. I wasn't in a rush to, you know, try and catch a home run, anything crazy. However, this ended up being a decent trade. It ended up being about 2.4 off for closing somewhere inside this consolidation, right? So a very decent trade, and from there you guys can see it reversed. And this is why it's very important to, you know, recognize decision making, because we were actually very firm in our bias, right? And of course, price has turned around. And as you guys can see, we had a completely wrong. We wanted to see this Tuesday push to this previous daily high and then this high, which would have been previous weekly high. Price did not do that. Instead, price traded lower for the next 2 days. However, even being wrong, there was a chance to make money. There was a decent setup offered in the London session. All the variables lined up. We had the displacement. It was at the right time. You know, the PDRA matrix formation supports this. The order blocks with the expansion. The local high was broken. You know, it was all pointing towards going here. But then, you know, some people, and of course, you know, a lot of people will do this where you're trying to juice up those last few pips. You're in this consolidation. You're thinking, oh, if it just takes this high, or when it takes this high, I'll just close it. Sometimes it's, you know, think of it the other way. Try and flip it around. You're trying to juice those last 2-3 pips. Why not just tell yourself, you know what, if I close it here, it's basically the same, and I get to secure my money right now. Just walk away from the screen. Come back for New York if you do that. If not, just, you know, you're done for the day. And that decision, of course, saved me. And, right, worst comes to worst, if I had not closed the trade within this consolidation, right, as the session was ending, I had already moved my trade to break even, right? I'd moved it to cover this low, but, you know, once we get into this area, if for whatever reason I decided, you know what, I'm actually quite confident, I want to hold this trade, I want to see price go higher, then I would have definitely moved to break even or just slightly into profit. So worst comes to worst, when price trades lower and does something like this, I get stopped at 0, meaning nothing lost, nothing gained, right? And it's not the end of the world. You never want to be in a situation where you are in a trade, right? You've entered, your trade has gone up 1R, 2R, almost 3R, reverses, and now you're taking a 1% loss. That should not be happening in any circumstance. As your trade goes up, make sure you're acting accordingly. We want to get that risk off the table ASAP. As soon as possible, we want to trim it, right? As soon as reasonably possible. Don't be too early, right? You wouldn't want to see this first candle way and then go, you know, trim it here, and the price trades back down here, taps you out, or spreads tap you out, and then goes, right? Be sensible. The second that this high got taken, that is a very valid reason. This is taken with a lot of energy, with a fair value gap. This is a good reason for us to trim the stop loss. And then the fact that, you know, price is sort of sitting here and we're expecting higher prices, let's go break even. Because if it comes to your break even, right, assuming your break even was the start of this fair value gap, if price hits this, there's a good chance it will probably trade through this as well. Right, so why not just save yourself the hassle, just put the stop loss here? Or the smart decision, and, you know, sort of lucky decision, you can say to an extent, was to close here and just secure the 2 point something or profit, not call it a day. But yeah, guys, that's a very simple setup. I hope from that you guys see it's not very hard, right? It's timing mixed with understanding of our arrays, understanding, you know, what is the drawn liquidity, what are we looking for on the daily chart? Do we want to see the day trade higher or lower? And of course, I can't show it as accurately. Even if I was to go into replay mode, it's not as accurate for you guys to see what was happening as the candle developed. But remember, it's always that same process. It's just rinse, repeat, rinse. What saves you and keeps you going is that decision making. It's very important you guys understand what you need to do when you're doing it, and, you know, of course, why you're doing it, right? Because if you know that, then it's very likely to stick to that. But yeah, guys, very simple trade breakdown. Any questions at all, please just leave them below. I'll get back to you.